Are you lost about tax exemptions between the new and old regime? You're not alone because there's no way 1.4 billion लोगों में कोई confused नहीं होगा. This year's union budget was a huge release. No tax up to rupees 12 lakhs. वाह भाई वाह. But the new regime also brings up a lot of questions about loan exemptions. Where are they applicable and how? We are here to break it down for you. Because let's be honest, sorting your tax exemptions is like Bengaluru के traffic में घर पहुंचना. The new tax regime does not have as many exemptions as the old one, but there's still some breathing room. Whether it's the new one or the old one, let's see which benefits your loans the most. Exemptions removed from the new regime. Interest on housing loan for self-occupied property, Section 24B. Interest on education loan, Section 80E. Personal loan for home improvement, Section 80C. Personal loan on constructing and buying residential property, Section 24. Personal loan for business purpose, Section 36(1)(3). There are 3 loans we are going to talk about today. Home loans, education loans and personal loans. We all dream of owning a house or investing in property or just want our parents to stop saying अपना घर अपना होता है. Whatever your reason, the new regime does not allow deductions for all types of home loans. In the new regime, if you buy a house to rent it out, then rent का पैसा तो आएगा ही. Plus, you will also get a deduction on the entire interest amount for that home loan. But the new regime is like biryani की इलायची. दांत में तब लगती है जब you have to take a home loan for yourself. There are no deductions available for the house you live in. However, in the old regime, not only do you get an exemption of rupees 2 lakh on interest, but under Section 80C, you get rupees 1.5 lakhs on the principal amount as well. And there are no conditions on whether you are living in it or renting it. So, should you go for the old regime or the new regime? Well, that depends on both your income and the type of home loan you have. So, look into both before making a decision. Next up, we have education loan. Just like many other deductions, interest on education loan also flew out of the window in the new regime. Why? But under the old regime, you still get a full deduction of loan interest under Section 80E. Last but not the least, let's talk about personal loans. While personal loans are usually not a part of exemptions, there are some areas where you can find tiny wiggle rooms in the old regime. Just remember, they will ask you for all the documentation possible. Let's go over them one by one. Number 1, for home renovation. If you take a personal loan to renovate or repair your home, then you get a tax deduction of up to rupees 30,000 a year on the interest paid under Section 24B of the Income Tax Act. For example, if you took out a personal loan to renovate your house and you paid rupees 50,000 as interest, you can claim a deduction of rupees 30,000 and pay taxes for only rupees 20,000. Number 2, property construction. If you take a personal loan to construct a house, then you get an exemption on the interest of the EMI you're paying. But वो asterisks मत भूलना. There are definitely conditions to it. If you're building a house for yourself, you will get a standard deduction of rupees 2 lakhs. If your construction is not complete within 5 years from the date of the loan, that's when it hits a little hard, as the exemption goes straight to rupees 30,000. Let's make this simpler with a scenario. Say you have taken a personal loan in 2023 for 7 years to construct a house, and you're paying approximately rupees 2 to 3 lakhs in interest every year on the loan. Till 2028, you will get an exemption of rupees 2 lakhs, and you will continue to get that if your construction is completed by 2028. But if your house is still under construction after that, then the deduction will be only rupees 30,000 on interest from 2029. However, if you're constructing a property to rent it out, there is no limit for deduction on the interest you're paying each year. Number 3, education expenses. If you're taking a personal loan for the education of yourself, your spouse, or your children, then you can claim tax deductions in the old regime under Section 80E on the interest you're paying. And you can get this only for a maximum of 8 years, unless your loan is paid off before 8 years. Then you have nothing to worry about. For example, if your education loan is for 5 years, you can claim deductions on interest paid for all 5 years. If your education loan is for 10 years, you will get tax exemption only for the first 8 years of repayment. And then comes number 4, business expenses. If you took a personal loan to start your own business or invest in one, you can claim a reduction on the interest as a business expense. And there are no limits to it. It comes under Section 37 of the Income Tax Act. In this roller coaster of tax exemptions, we hope you found some clarity. The best thing to do is compare your tax liabilities in both tax regimes before deciding on which one to file your taxes with. And that's everything in a nutshell. Congratulations on becoming smarter than Sharma ji ka beta. But on a serious note, we hope this video was super helpful for saving tax liabilities on loans. Like it, share it, and subscribe for more such videos.